Welcome to the FNO InsureTech Podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world, welcome to another exciting edition, a two-timer, a second-timer with us today at FNO InsureTech. I am your lowly co-host, Rob Beller, and he is your host, Lee Boyd.
Why are you always so down on yourself?
Huh?
Like, is this like one of those things where like you're playing with people's mind and you're like, I really am that important. I'm just going to tell them all I'm not. And
It's
everybody's like, oh, he's so nice to
busted,
Lee.
Busted true.
So nice to Lee.
It's where I'm playing with your mind.
Yeah, I appreciate that. It makes me
Do
feel
you?
really good. Really good.
I'm kind of like a human brain teaser
Yeah, I guess.
in a tragic and sad way.
Yeah.
Uh-huh.
You're in a different room today. Where are you at?
I am. I am in the beautiful Beller Brining. That's my wife's last name.
Okay.
Television room.
You're kind of lounging on a couch.
I am lounging on the couch where we
And
lounge.
it looks like you have a robe on. I think it's a coat, but from sitting here, I see you in like a red velvet robe, lounging on a couch, doing this interview, doing this intro.
How about the fact that I'm smoking a pipe? Does that have anything to do with this
that
image?
could be a pipe room. That could be a pipe room in your red velvet robe with a pipe.
Okay, let's stop right here because as you all know who listen to this podcast, you do not get a video, which you should be thankful for.
Yeah.
Number one. And number two, I am not wearing a red velvet robe.
You are not. You're
No,
not.
I'm
You're
just
dressed
wearing
appropriate.
like a pullover warm
A nice
thing because
coat.
it's cold here
Columbia
today.
coat. Yeah. No,
Yeah.
you look nice. I'm
like
just
a
saying.
Patagonia type thing. And
There's mood lighting. I mean, it could be.
I'm in my TV room because I got kicked out of where I normally do podcasts because my wife was using that room. So, you know, that's what happens when you live with other people.
You got a lot going on, man. You got a lot going on in your house. You're doing remodel. Your wife's working in your office today. I mean, you got a lot going on.
Lot going on. As do you. You have so much going on. You weren't even able to be on this episode.
I wasn't. I had to spend the week traveling. It was kind of a impromptu trip that I went to our home office. Hadn't been there in a little while. Went to the home office for a meeting. Traveled down to Florida for another meeting, but I had to miss the podcast. And I hate it when that happens.
Covered a lot of territory, I'll say.
I did. And sometimes I can do the podcast while I travel, but I was actually on the airplane. And you know, that Wi-Fi on the airplane's not always great.
No, I don't think we should be doing podcasts on airplanes.
No.
If we can avoid it. And fortunately today we were able to because we had a wonderful guest join us from South Carolina, Ty Harris, CEO and co-founder at Openly. Many of you know Openly. And the terrific thing that they've done. I mean, they literally started an insurance company several years ago, and they're cooking along. They're in 21 states and growing substantially and doing a good job of it. And we wanted to check back in with Ty to see what's the latest and what's cooking and what's it like being in this world that's a little different from when we had him on earlier during COVID.
Right. I'm excited to hear it. I'm excited to get to hear what he's up to.
And this is kind of turnabout as fair play because the first episode of Ty Harris, I wasn't there. It was just you.
You're a gallivanting.
And the second episode of Ty Harris, you weren't there. It's just me.
Yeah. See, I think it's fair play. I think this is, the way it should be.
I asked him at the end. I said, "Hey, Ty, who did you like more, Lee or I?"
Yeah.
Do you want to know what he said?
I don't. I don't.
Okay, we'll leave it at that.
Because either way, you're lying to me or telling me the truth, and you're going to say.
We'll leave it at that. Let me just say this. Don't worry, Ty, your secret's safe with me.
Nice. He's probably like, who's Lee? I don't even remember that podcast.
I have no idea.
I don't even remember that podcast.
So without further ado, here is our interview with Ty Harris, CEO co-founder at Openly. Hey, everybody. We're here with our special guest, a returner, a second-timer, two-timer to FNO InsureTech, a name I'm sure that many of you will recognize. I'll get to that name in a second. Just calm down. First, I have to tell you that Lee Boyd won't be with us today because he's, I don't know, doing something. I don't know. I don't believe him when he told me that he had to work, because that's something that I never seem to have to do. But anyways, today we have Ty Harris, CEO, co-founder at Openly. Is it Openly or Openly Insurance?
I've seen it both ways, but we generally just call it Openly for brevity. But Rob, thank you so much. I'm excited to be here.
Well, it's great to have you back. We had you here. It was about a year and a half ago, maybe a little more than that. What's new?
Feels like a lifetime. I tell you what.
I'm sure to you. I'm sure to you.
Yeah.
Let's see what's changed. Return to office. End of COVID. You can't make money in the P&C market. Did I leave anything out?
Well, that last one's been a little more important. We just never returned to office. Frankly, we were we had probably 15 people at the company when COVID hit. We were very early days. We had just started selling, and then these days we have about 350, and we've grown as a totally remote company. We have people in 45 states, and candidly, if you'd asked me before that if it would work, I would have said no. I was a believer in must be. But anyway, that's actually a big success story for us. That's worked out great, having those remote teams. But the second part, that's been a challenge for everybody. It's not, I've been in the business since 2005. I got into it, and this is like a market I've never seen before in good and bad ways. But
can you see an end to it? Can you see how it changes?
Absolutely. So we're in the homeowners insurance space. We're existing in 21 states. We're actually not in any of the what you might think of as the troubled states, right? We're not in California, we're not in Florida, we're not in some of the ones that make the headlines. And yet, what you're seeing is in markets like, Illinois and Missouri and Kansas and Tennessee, you're seeing some of the phenomena that in the past you would have only observed in the really tough markets. And that's, just we can talk about what has been going on, but it's certainly the first time I've seen the correlated problems across the auto line, which we're mercifully not in at this moment, and homeowners. But to answer your question, it is. Carriers have taken the most dramatic actions to kind of right the ship on their profitability across eligibility and rating and underwriting. And I think it is starting to turn. You see some of the auto carriers, again, we're not in that business directly right now, but you see, Progressive was out front. You see some of the others starting to turn and report better results. So I think it's turning, but it's still in a rough spot right now.
Okay. Well, like you said, we can get more into that. I kind of jumped the gun there because it's such a important topic, particularly for yourself. But let's take one step back and talk a little bit about Openly. Like I said, you've been on the podcast before. We've talked about it, but just kind of refresh us on what is Openly and what makes you guys unique and special.
Yeah, absolutely. So Openly, we are we now say tech-enabled insurance provider. We are going after what I'd call broadly the sort of mass affluent homeowner space with a strategy. But the really important thing about us, our thesis, which is coming a little more vogue now than it might have been when we started the company 5 or 6 years ago. But we believe that independent agents, independent retail is very much the future of insurance, and that the incumbent big carriers have not been building for that world. They've really been building on the assumption that what you would think of as direct distribution is the future, big brands, things like that. So when they were kind of zigging, we zagged, and we built this, what we look at as an amazing carrier specifically for the independent agency world. And so our goal is to eventually become the number one provider of personal insurance through independent agents. Like I said, our first product right now is an upmarket home insurance product that we have in 21 states. And the way that we try to win, we provide delightful ease for our agents and obviously our customers. So we have very high net promoter scores, and it's just, an 8-second quote and great claims handling, all that. Secondly, we have a huge research team. I'm an actuary myself. We're all kind of nerdy. That is taking advantage of the data that is now available real time when you quote a customer to build better and better predictive models so that you have a good loss ratio. And then the third component of our strategy is that we are driving toward a best in industry expense ratio. So we're driving our total expense ratio down to like the 25 range. Our competitors are more like 38. We're not quite there yet, but
Right.
that'll be an insurmountable advantage. So that's what we're up to it openly.
Okay. Is it possible to get that low?
It is possible. Part of it is being really clever about what you would think of as like the variable costs of insurance. So for example, when we quote a customer, we're very crafty about how we order data in a certain sequence so that we're, getting the cheaper data first and maybe not even ordering the more expensive data, stuff like that. Claims, we handle 80% from the desk. Many competitors are sending someone out there all the time, things like that. And then so part of it is what you would think of more as overhead. So we have dozens, not thousands of programmers and actuaries and people like that who are building on brand new from scratch technology and models. And so we lack a lot of the overhead drag that you eventually build up as a 100-year-old carrier. We'll have to fight to maintain that advantage. But anyway, it's possible. We'll be there. We need a little more scale to get there.
Well, I agree that that's part of what has to happen, and legacy companies have many advantages, but one of them that perhaps they don't is just what you said, is they have a way of operating that made a lot of sense in 1967, but maybe not in 2027. And so, how do you capture all of those advantages? Your company goes into a very kind of interesting spot that you market to, and I want to talk about a couple of things about your marketing. One is, do you consider yourself a high net worth carrier?
No, I wouldn't say that. So what we want to go after are homes that are still in the range where they're somewhat homogenous, where from data about the house and overhead satellite photos and knowing basic things, we bring in hundreds of pieces of data, but we don't want to write the homes that are museums that are kind of
Right.
truly bespoke. So to put that in real numbers, our average home replacement cost is somewhere in the $700,000 range. We'll go up to maybe a $2 or $3 million replacement cost home, but we're not writing the 10 millions. We overlap just a little bit with the Chubbs of the world and the Pures, but it's less overlap with those than maybe the higher end of the preferred market carriers, I'd say.
So it might be in a development where there's a builder building above average homes, but
Yes.
not stamping, but not one custom home after another custom home after another.
Yeah, I mean, yeah, it's nuanced, obviously. I mean, you have areas
Sure.
where people would build what they would probably call custom homes that are million and a half, and we see developments like that. We're happy with that, but yes, if it's marble everywhere, museum quality, Picasso's in the living room, that's not our market.
And why that space? Why that spot?
Well, I approach it from two dimensions. From the one direction, if you're not careful as a new entrant into insurance, you will just by default and automatically become a really non-standard player. That happens a lot in auto, right? You see people come in and say, we're going to be a preferred auto carrier, but then they get kind of crammed down by just the forces of competition, and the agents, use them last, let's say, at first.
Uh-huh.
And so but you face a little less danger of that when you're going after single family homeowners as a new entrant. It's a great place to enter the market. But on the other hand, you don't want to swing too high because the data advantages that we bring to bear, a lot of our advantages is being able to really quickly underwrite a home super fast for the agent and customer and still be extremely accurate about it. And you lose some of that data advantage if for a castle, right? For a $30 million home, you just got to send somebody out there and do a detailed inspection. It's worth it. And you're not going to get as much bang for your buck by having an 8-second quote on a $30 million home. And candidly, we'd be scared to do it. We want to limit our exposure to that sort of selection that could happen.
But you don't want to be down in the $200,000 homes, right?
Right.
In the big development where, there's all smaller homes at a lower price.
Yeah, I would say the size of the home is certainly a piece of it for us. The really important thing is finding that market where you do have the pride of ownership, and part of that is newer homes. Part of it is the size of the home. Part of it's other characteristics, past claims and the newness of the roof. And there's a lot of stuff that goes into that. But we do find in general that if you want to offer a premium product, so we have a product that doesn't have a lot of gotchas waiting for you. It's, a HO5 based product that's pretty broad in its coverage, let's say. If you want to offer that product, you want to have a premium claims experience. It's tough to serve all worlds, right? It's tough to do that serve the non-standard segment, but then also the castles, you just can't do it. You have to have different experiences. And so we created one experience, and we think it kind of fits in that middle part right there.
And then when it came time for you to market it, you did something that I thought was actually aggressive and kind of exciting. And that was when you started selling insurance, we were in a time when there was still conversation that we're going to get rid of agents. We're not going to need agents anymore, right? We're going to be able to go direct to consumer, and many, many of your competitors tried. And I dare say maybe failed that in that going after that model. And we could talk about why that is, but you said from the beginning, you guys said, no. We're going with agents. I mean, obviously you could have done either or both. Why? What was it in your background? Because you have an insurance background. Why did you make that choice right off the bat? And it seems like it's worked. Is that the case?
Well, we believe it's worked since we've launched. If anything, you've seen the independent agency channel growing, not shrinking. You've seen, there's been certainly some consolidation of smaller agencies.
Sure.
You've seen some of the big formerly captive carriers have turned themselves into giant independent agencies. That's a big trend over time. But the thesis to me is when people hear agents, what they think, okay, no computers in the whole process, right? No technology involved. And I wouldn't agree with that, right? I certainly think agents, what we call an agent, is going to become increasingly digital over time. You'll have part of the customer journey done online and then part of it offline. And then maybe someday it'll be purely digital agencies. I think we're a ways away from that moment, but that could happen. What we don't agree with at all is that, or I guess what we do really believe is that you're going to have this independent retail layer, be it, part human, part computer, but you need that independent layer where a consumer can go to one single point of contact and be able to compare price and product across multiple carriers. It just makes no sense for a consumer to go, okay, I'm going to shop for home insurance tomorrow. I'm going to go call or go online to this carrier and then put in 48 pieces of information. Okay, now I'm going to go to this carrier and put in 72. Now I'm going to go, and you'd have to do that 10 times. It would take your whole day. You don't know what you're shopping for. All of them would try and sell you their product, even if it wasn't the right fit. That makes no sense whatsoever. And you never want to bet against consumers in the end. So I think we said the consumer is going to win. You're going to have this intermediate layer. Yeah, it's going to be a little more digital over time, but agents will adapt to that and make themselves more digital. And we're going to build the product that wins in that channel. And I think you do see others coming to this conclusion. Again, to me, it's fascinating that some of the big captive carriers themselves are coming to this conclusion, right? They've built enormous brands around selling their product. But now when you call them, instead of just selling their product, they'll actually say, okay, you can buy our brand, but also we'll sell you this other brand or this one, because they've realized that that's best for the consumer. And it's actually the best way for them to monetize the consumer. They've spent all this money on the TV ad to get the customer to call. And then are they really going to let them walk away 90% of the time? No, you got to sell them something, sell them someone else's product, make a commission at least. So
that's right. The acquisition cost is so high. Why would you say, no, I'm sorry, I can't help you? Right? Sure, I can sell you openly. Exactly. Can you see yourself being in a channel like that? Could you see openly being in a channel like that?
Yeah, we are pretty broad in how we define independent agencies, and today we have arrangements with a few carriers already where we're selling on a small basis through. We have to feel like whatever we're selling through really is independent and an objective advocate for the customer. So we don't want to be in a channel where it's okay. They're always going to try and sell their brand, but then at the last second, if they just possibly can't sell anything on their brand, maybe they'll like as a last resort try. We want to be on somewhat of an equal footing, but I think increasingly you see carriers doing that and making their in-house agencies more and more independent. And so we're open to that as that evolves. Of course, that's not the majority. We're in 7,000 agencies across our 21 states, and a couple of them are carrier affiliated. They're mostly truly independent.
Mm-hmm. And I would think that by doing that, your marketing approach is different, or maybe more efficient, or maybe more cost effective, to get back to your expense ratio comment.
Yeah.
Is that right? I mean, they're carrying some of that cost.
Sure. Well,
Sharing
we've got our own kind of sales motion, if you will, is going to different agencies, obviously. And you have a different approach. If you've got a massive aggregator or a big huge agency, whether it's carrier affiliated or not, you have sort of an enterprise sales team, and there's a central relationship there. But even with those, there's always a way to make your way out into the branches, right? And they have different models. Some of them, once you're on the main platform, you're everywhere instantly, and some of them it's like you get on the main platform and then you have to still kind of win over the local offices. But that's one motion. It's much more centralized, enterprisey, and then we have more regionally and state allocated state teams that go out and find the smaller agencies. I will say some of the best quality business certainly comes from some of the smaller agencies. So if you were to say, hey, only go after the big enterprise agencies, I think you'd be shooting yourself in the foot if what you want is good, a sticky, well underwritten business. So we still reserve a huge place in our heart for the very traditional smaller independent agencies. And fortunately, our tech, that's one of our, to your expense point, that's one of our advantages, is that our tech makes it so easy for the agent to use. We do have a training process, but it's easy enough that they can pretty much pick it up if they just know how to be an agent, and
Right.
that has saved us a lot of money in terms of those interactions.
What's harder, finding an agent who will represent openly, or getting that agent to then write your business?
Well, what we see, it's interesting. If you, when you, I'm going to say the second one is probably harder, getting people kind of gardening as opposed to hunting, because it's the process. When you see our technology, the process is so easy. We want to find an agent where we feel like they're a good match for us in terms of the market they go after, and they have a good track record, background check, all that. But then once they see our process, we have a very, very high success rate with it being a mutual fit and then wanting to work with us. But we do see a number of agencies who get the technology or the program, and then they don't use it for a while. And what we see is over time, if you track cohorts of agencies, they'll sign up 1 month. If all agencies that signed up last first quarter, they'll do a certain number of quotes the first month, and then the second month, and it goes up and up and up and up over time. Partly as a result of things we do. But I have my co-founder actually had an independent agency that he scratch founded in the pre-openly days. And I having been in that agency and witnessed it, it's hard. It's a busy, hard life as an agent. You are, especially if you're trying to grow, you're employing a bunch of people who come into this with different levels of vigor, and you're maintaining that. So I see why, if you're an agency trying to manage 8 different carriers and you got this new great openly thing, it is entirely possible that you just don't remember to think about it for a year. And so what we found is sometimes we can go and I'll call it poke, but give some love to agencies, and they'll just remember, oh yeah, I signed up for openly, and let's start using it. And once they start using it, you see this great upward trajectory. But I'd be lying if I said it was easy to get all of them to get on board. That's not the case.
But your tech enabled slant, really, I mean, that's who is primarily geared towards, is I know that you, at least I assume it's still the same. 3 questions
Yeah.
is what you need from the prospective client, their prospective insured.
Yeah, so we want the tech, the best tech doesn't require a tech-enabled version to use it, right? Like so you want your,
In
just like you
fact,
want
the
your,
opposite, right?
right, exactly.
Uh-huh.
So what we really, well, sure, it's great. Look, a really tech-enabled agency, we have like an API they can build on top of, and they can build their own user interface and hook into our tech, and that's great if they want to do that. But the vast majority don't want to do that. Instead, what they want to do is go in and put in the customer's name, date of birth, and address, get back a quote in 5 seconds, and yeah, that is our general hook. Now, it's a pretty smart system where, oh, if this customer's case, we didn't get a hit on this kind of data, or we need you to verify this very intentionally, and so it's a little more dynamic. But that is the general premise: is about 10 seconds to a bindable quote, and that's the flagship feature. But I will say, with the agents, it's a lot of ease beyond that. So just think of something like the mortgage closing date on a house changing. That is a giant pain with many carriers, where you have to go back and totally rewrite the policy, enter all the questions again, the price is going to change, et cetera. With us, you click a button. That's an example. But even beyond the technology, we have very, very high net promoter score post claims with customers. We have very high agent um, net promoter score in general. We have one of the highest first quote rates. In fact, the highest. When we did a third-party survey of agents, we were the carrier they were most likely to quote first. And so it's ease beyond just that initial quote, but yeah, that's kind of the flagship feature for us.
I'll ask you this because we're claims people, and we had Gina Reyes, your chief claims officer, I believe is her
Yes.
title,
Yeah, she's great.
on our show, and it was great. And I think she was really enjoying the opportunity to be able to build a claim department instead of that's not tied down to a lot of legacy process and technology. How important was your claim side? Because isn't that where you really bleed not money, obviously, but also customers, also insured.
Oh, absolutely. And for us, it's even worse when you're in the agency channel. If you're not good at claims, then you're not just annoying one customer at a time, because they're not, they don't know how many, they don't have that many friends who they're going to really tell not to buy your insurance. I mean, they might, but they'll tell their agent. Their agent will hear, hey, blah blah is not good at claims, and then they won't sell you anymore. And the flip side is very powerful. If agents have some good service and claims experiences with you, that suddenly becomes an acquisition tool, I think, more than it is in a direct to consumer channel, because agents do this all day, every day. They're much more likely to actually evangelize you to people who are at the buying moment. And so it's just been night and day. Gina's amazing. Her team that she's built is amazing. They have some of the stats. I mean, our net promoter score post claim on claims that we have to deny is higher than it used to be on claims where we paid before
That's
we
unheard of, honestly. I'm not
So
just
it was,
saying that, right?
yeah. So it was, but it also speaks to where we were in the early days of the company. That wasn't, yeah, we hadn't optimized that yet, and it's just been amazing what she and our team have done since then. So we're really excited about that.
I want to talk about you for a minute. You're a nerd and a unique character.
Thank you. At least the second part. I'm kidding.
When I was making notes about this episode and preparing for it, I thought, make sure you say, Rob, that with all respect, you're a nerd. But I didn't say that. So sorry. I mean it very respectfully, and I mean it glowingly, right? I'm completely not. And we look up people like me, look up to people like you. And so, but ABD, educated.
I embrace my nerddom and my made up ABD, all but dissertation education. Yes, but yes, sorry, go ahead.
You're this close.
You're
this close to a PhD in economics. Is that correct?
Yes. So that moment is frozen in time. But yeah, I went to undergrad and then went to grad school in economics up at MIT, and had a great time there and enjoyed it, but decided ultimately that the academic world was not for me, and so I didn't ultimately write my dissertation. So ABD is the shorthand that us nerds use for when you leave before doing your dissertation. And yeah, I went to work. I actually worked at Liberty Mutual for about 12 years. That was my entree into the insurance world. For the first couple years, I think I still told myself I was going to go back and finish my dissertation. That was my mental cope for accepting that I wasn't going to. That never happened, but it's okay. I've enjoyed my insurance life ever since.
Semi-professional poker player?
Yeah, and that
Can
might
I
be
use that
correlated with
phrase?
you
Semi-professional?
yeah, it sounds like something on a Talladega Nights, but it's the semi-professional poker player could be correlated with why I never finished my dissertation. I'll just say that. But
Ah, okay.
I did used to play a lot of poker before uh, it was so online, and then right as it was coming online, I actually built robots to play poker as well. That was even probably maybe more intellectually engaging. I would build a little software that would optimize that stuff, and it's
Mhm.
kind of interesting.
Ballroom dancer.
Oh, now you're cutting deep. Yeah, that was my
Yep.
well, when I
I'm
was at MIT,
I'm
they're
putting
they're
it all
gonna
out there, okay?
let's
You're
just
fair game.
we'll be honest here. Yeah, it's a little known, very serious sport. MIT is great at like pistol shooting and ballroom dancing and in the sports categories. So I was doing that, man, 10, 15 hours a week, very, very serious. I get serious about things. So when I pick
Uh,
up a hobby or something, I'm not gonna do it halfway. So I was doing a lot of traveling to compete at ballroom dancing for years. Yeah.
so so you're at Liberty Mutual. You have a very serious job there, Chief Product Officer, I believe.
Yep. Yep.
That's like, for those of you who don't know, that's a big gas job and big job. And at some point in time, you must have said, "Hmm, I should start a company and it should do this." Is that kind of what happened?
Yeah, yeah, and I wanna be very clear that I loved Liberty, and it's an awesome company, great people, had nothing to do with me running away from something. I think I realized that the greatest satisfaction I find is taking something that's near 0 and just building it up rapidly, right? So our goal, we went from existential panic over is the company even going to work? Are we going to be able to do anything with it? Are we ever going to sell a policy? To now, I can actually see on the horizon we can be number one in this space. Right, we're going to be the biggest PNC carrier through independent agents, and I have no doubt that's going to happen. I know it sounds nuts, but being able to go on that kind of journey arc to me is what across you have like little things like hobbies, but obviously my career, that's what gets me excited. And I find that at a big company, by its nature, you're going to end up playing a little more defense and a little less of that offense. And I just wanted a little more offense, I guess, in my life is how I saw it. And then I saw a lot of opportunities in insurance. My co-founder and I sat down. When we almost picked school closure insurance. We said, well, you build a parametric product for if the school's closed, you give the parents a little money for their, the snow day, pay a babysitter for the kids or something. Glad we didn't bet on that one pre-COVID. But anyway, we emerged with this one, which was doubling down on building for the independent agency channel, and that's where we went.
And you think that you can be number one?
I do, and I don't just I'll be we
It's
if you
okay.
look
You
at
can be
our
bold.
I'll say the reason I do think that, and I'm not just throwing that out there. The reason I believe that is because if you look at our new business sales in the states where we operate, so we operate in about a third of the states by volume. You look at our new business sales, we are creeping up on the top players through the independent agency channel. Those would be Travelers and Safeco, the Liberty sub brand. Our new sales, we're not quite there, we don't think, but we're getting really close. And then our secret weapon is that our customer churn annually is about half of what theirs is. And
Oh,
so,
that's what do you blame for that? Why?
yeah,
Why are you doing such a good job there?
it's heavily related to customer selection, but not entirely. So if you go into any big carrier, a nerdy actuary like me can build a model and predict pretty well at the segment level which customers are going to be sticky and which are not. And all of our many of the models in our company basically reward customers and reward agents for giving us or placing those customers with us. through obviously, pricing and eligibility models and commission and things like that. We're laser focused on that as in addition, obviously, to loss ratio. And the idea is that high retention customers actually cost us less in the end. Their loss ratio gets better over time, et cetera. So let's target those customers. And so part of it is that the segment and the targeting. Part of it though is when you have amazing post claim net promoter score, then the customers want to stay with you, and the agents want to leave the customers with you as well because they're having a good experience. I will, as a final caveat to all that, I'll say everybody in the industry right now is doing things in some segments that are painful and necessary, raising rates and targeted non-renewals and things like that, where it's a very unusual moment. And so I think for everybody, the sort of organic churn is, you incremental to that, you've got a little inorganic churn, if you will, that's a temporary phase as we all adjust to the new reality of weather and reinsurance pricing and things like that.
Mm-hmm. Mm-hmm. So tell me who you admire in among your competitors, and admire maybe isn't the best word, but who you have respect for, because of the way that they run their playbook.
I think to me, Progressive really stands out, and not we go after a little bit different market segment. Obviously,
Right.
I know that there are a lot of agents. They have an extremely wide funnel for agents, and a lot of agents don't necessarily love their dealings with them. So that's not the part I'm admiring. The part that I really admire is their ability to quickly fix problems in their business. They just invariably and exploit opportunities. So they were, one of the first to adapt like e-servicing for customers, one of the first to adapt telematics, first to adapt credit. If they have a problem and their, auto combined ratio goes to 97 instead of 96, they're the first ones on top of it. They're the first ones to get their reserves in order. And then what that means is that they can be the first ones back to growing after you exit a difficult period for the industry. So if you look during this current market cycle, it seems like they've been the first one again to get back to their target profitability margin, and then to get back to growing. I sound like a Progressive commercial. This is a lot of what they put out there, so I'm not saying anything people won't have heard, but my observation of their metrics certainly seems to support that being the case.
They come across to me as healthy, right? It's a healthy business in a time when you can trip and fall pretty easily.
Yeah, and not to mind read, but it feels like they're honest with themselves about what's happening. They see the world as it is, not as they want it to be, right?
Mm-hmm.
If there's a problem, it seems like they fix it. I think a lot of carriers will not admit a problem and kind of look the other way and bury their heads in the sand because they don't want to take the action that they know they probably should take. And so they end up being behind the 8 ball.
So as a CEO, do you take some lesson from that? I mean, is that kind of how you try to run your shop?
Oh, absolutely. That's absolutely my goal. I'm sure no one, including me, always achieves, manages the way they'd like to or leads the way they'd like to. But to me, that is, especially in insurance, maybe in every business, but it's so important to just have an open dialogue where you've got a team of really smart people who can speak their mind, and no one's going to take it personally that the underwriting guy says, "Hey, we got to raise the rates," and sales guy isn't going to storm out of the room because he's personally offended by that. He knows that he's talking about the business, and it's nothing personal, and we're going to debate the idea, but it has nothing to do with the person proposing it. And I think getting that level setting, that now analytically perceiving, getting to the right understanding of the business is such of an important first step. I'll say just focus too. Like but just because we don't have 30,000 people, we have to focus, but it's so refreshing to me to be able to have one or two key priorities at a moment instead of like 10, which I think so many companies have 10, and then you really end up just, dropping the balls on 9 of them.
Do you see a day where you'll be writing auto as well?
I do see that. I'm very happy right now that we didn't dive headlong into that a couple years ago. Although, like I said, I think that market is improving right now. So maybe right now is actually the moment for someone to jump in. From our perspective, we cannot focus on building that right at this moment. So it's not our focus right now. Right now, our focus is getting homeowners dialed in exactly the way we need it. but we are leaving a lot on the table ultimately because there are customers and agents who insist on bundling. You increasingly, I think you're going to see cross underwriting where you underwrite the home better by knowing about the auto, and you underwrite the auto better by knowing things about the home, things like that. So we're leaving something on the table, but right now it's not has not been the moment to jump into that.
Yeah, I just went through a shopping period myself and skipped the end of the story. I ended up staying where I was, which is with Safeco and an independent agent who really. And I talked to a number. I'm in California, so one of the things I ran into first was, sorry, we don't write property in California anymore. I actually hit upon that several times, right? From big, major, top 10 carriers. And you guys have been at 21 states for a little while. Is that going to change? What's going on there?
Yeah, absolutely. We've been.
I mean, you can't get to number one if you're just in 21 states.
No, well, we'll eventually be everywhere. We're paused. We've been paused on our state growth for a year and a half because we have been adapting to two things on our end. One is finally having data. Right in the early days of the company, you don't have enough data to train all these models and to get them dialed in, and now we have enough to get it dialed in. Secondly, the world of reinsurance and weather changing, et cetera, has driven everyone, I think, to reevaluate their underwriting, their loss ratios, and so we've been driving that thing down to our new target there. So that's, like I said, focus. If we were launching 10 states while at the same time trying to fix something or optimize something in the existing states, I don't always believe in doing that. But with that said, I expect that later this year we'll get back to launching some new states. Those will not include California or Florida for a while. I think we'll probably we'll see where the market is, and
Yeah.
we'll have to evaluate our approach for states like that. But those are
right.
more at the tail end of the list for right now.
And I would think, like in California, where the DOI is and what the DOI is up to is probably very important to whether you can enter a state like California or not, or Florida.
Yeah, to me, that's ultimately. I mean, you can adjust to almost everything if you can get your pricing right, your underwriting right, et cetera. You have to be in an environment where the regulation works and where the justice system is kind of functioning, and trial courts work, things like that.
Yeah.
Those are the important things that are hard to win if you can't get those things right. But I think you're right. We'll have to see how those markets evolve over the next couple of years.
So we're in a tough period in the market. You say it's starting to change. What do you guys see? When you look out and you think about 2025, where's all this going? Just some thoughts there?
Yeah. Well, look, the flip side of the toughness is this is, from a business perspective, one of the greatest opportunities that exists in a giant incumbent industry, right? We're in home insurance. Last year, probably 130 billion, one of the last couple of years. That many external analysts are pointing to that going up 50% over the next 4 or 5 years, up to 200 billion. That's homeowners, and then you've got auto, similar dynamics afoot. So you're not going to have less home insurance, right? You've got bigger houses in riskier areas, and the weather seemingly getting worse, and inflation on top of all that, and so all of that, while challenging to deal with in the short term, creates a much larger market for all of us in the longer term. So it's unusual to have that in a 500-year-old industry that would seem to be at such a point of maturity as ours, and we feel extremely well positioned to be. You got to be agile in that environment where you can update your pricing quickly as needed, and you can adapt to different geographies and we just feel more agile than many of the big competitors. So really well positioned to take advantage of that. But more broadly speaking, where it's going, yeah, I think increasing the ability of all carriers to ingest the massive amounts of data that's now available and that's going to be continuing to explode. It's not, you can't just take a photograph and say, okay, at this moment, the data you're using is the thing that's going to make you win 5 years from now. It's got to be data you don't even know is going to be available, but it's going to come. Someone 2 years from now is going to have this new kind of data that predicts loss or that streamlines a process, and it's going to be your ability to quickly integrate that into your workflow that's going to make you win. So we see that increasing data availability. I believe the whole world's going to be independent agents, almost literally, because all of the captives. This is I don't know exactly the time frame, but it's not going to make a lot of sense to have captive agents. They may continue to call them, branded X agent,
Okay.
but they're going to be selling other people's products increasingly in order to make the economics work. And so you're going to see suddenly almost everything, and even the direct call centers, they're going to also all conclude that, hey, we should be able to sell other people's products. So I think you'll see a separation where the big brands are retail centers, but they ultimately sell a lot of different products. So in that world, you could rightly say that like 80% of the insurance is sold by what you'd call an independent agent, although it might someday look more like a European aggregator than a traditional independent agent. But
Mhm.
um, that's a lot of what we see happening. Just a lot of tailwind on the industry, a lot of short-term pain, but a lot of medium-term opportunity.
Well, with that kind of dollar growth, it's that a lot of that has to be the customer is getting used to insurance is going to be more expensive. And I mean, as a consumer, I don't want that, but as somebody in the industry, I understand. Of course, it has to be more expensive. It just doesn't. The economics don't work at lower premiums, at the premiums that maybe we've been used to over time.
Yeah, and I want to be very careful. You don't want to like cheer for that for consumers. You and I don't. Worsening weather, bigger houses. Bigger and bigger jury verdicts, more on the kind of liability side.
Right.
You're right; those are inexorable forces that I don't see those turning around, and I don't. So I don't see how the industry won't grow. Now, what we can do as a carrier is make sure that we're not squandering the increasing part of people's bank accounts that they're having to pay for this insurance. I don't want 38% of that to be going toward our administrative expense, right? If we can get
Mhm.
that thing down, like I said, to into the mid-20s, that's an enormous savings for consumers. A huge business advantage for us, candidly, but an enormous saving for consumers over time. And I think that's that as well as um, matching risk to rate, so that the people, some people may say, hey, well, my house isn't getting bigger and I'm not in a risky area, so why should I? And I agree with them. I think that we should do our best to match the risk to the rate, and do our best to siphon off as little as we can into administrative expense, which is just pure waste from the customer's
Yeah,
perspective.
I like that. I think that's a winning viewpoint. I want to ask you one last question because we've run up against the clock, but um, so much interest and action and activity around AI, and we hear a lot about AI in insuretech and in business, but not so much. How is a carrier using it as opposed to specific tools that are being developed to provide some kind of particular service within insurance? So, but as a guy sitting in your seat, AI has to be very exciting, particularly to help you push the kind of expense goals that you're trying to achieve. Is that right? And share, and if you can share with us how you guys are looking at AI
Yeah.
today.
Well, look, when people say AI, it can mean a lot of different things. Obviously, it can mean
Right.
everything from
Right.
um, what we would think of as like machine learning and very purpose-built AI. Like I said, I used to build AI personally to play poker and to predict sports outcomes and things like that. And I think that kind of AI, if you will, is of just critical importance. It's almost the most important thing happening in insurance carriers, and that's ingesting all of this data and using it to better predict claims and retention, and how a customer would like to be treated in this scenario, and what's going to be the right message for this customer, this agent, just across all the different functions. And that's nothing completely new, but I think the opportunity to build better and better models for those applications is enormous. But that's like building a chess model, right? It's like, I'm going to build a computer that can do one thing really, really, really well. And that is just, I can't overemphasize how important that is, and it's going to continue to be. The more general, but more recently, when people talk about AI, they might mean like a large language model or some of the generative stuff. I think the applications there every company has to look at their leverage points and say, well, what are we really spending enough money on that it could be kind of worth it, or is there even a quality trade-off? So for us, for example, you might say, well, why doesn't your service team go AI and start, instead of having humans answer the phone or chat or whatever, why don't you have AI do it? But for us, there's not enough leverage there right now because we spend so little money there compared with our overall premium, and it's so important that when an agent calls us, they're probably not calling to say, oh, how do I pay my bill? They're probably calling with some complex question about the dock across the street that has a different address. How does that and so that for us, the trade-off right now on that type of application is not there, but I'm sure there are companies that do get a gazillion how do I pay my bill questions, and it's probably worth it. But we are using it internally as well. So certainly like our from a leveraging developers up. So being able to code more quickly with a human still in the loop, obviously to review code as we build it, things like that. Internal like marketing, into a policy explanation for some of those applications. We've already found uses on the large language front. So I would just encourage people to think broadly about what it means, and to make sure that they are very intentionally thinking through the leverage and the cost and benefits, and not just jumping into it because it's called AI and it sounds good, but making sure the leverage is there.
Yeah. I mean, we're starting to see on the claims side some really exciting stuff, as it maybe helps with a true straight-through processing models. I don't know that it's quite there yet, but it's not far off. It's in the realm of the possible. And so it's exciting.
For sure.
Yeah. Well, listen, we have effectively wasted 45 minutes of your time today, so we appreciate that. And we appreciate having you back. It's exciting to have somebody back on, and they had an exciting story last time, and they still do. That doesn't always happen, and in the market that we're in.
Well, thank you. Appreciate the opportunity, and I hope that next time we have fully enveloped the entire world of insurance. Although maybe a few more podcasts in between. But I really appreciate the opportunity. Great talking with you.
Okay, thank you. Thank you, Ty Harris, for coming back and being with us again. Thank you, Lee Boyd. Or sorry you weren't here, Lee Boyd. We missed you. We hope you're here next time. Thank you, Alicia and Al, for being our producers and doing such a nice job, and for always being here, even when Lee's not. And what else? What have I left out about Lee? I'll think of it next time. But most importantly, thank you, the listener, for being with us. And until next time, goodbye, everybody.